Volatility on DigiPlus continues even after the calm sauna, but the whole index may come into turbulence in the coming weeks. Let's discuss. My name is Dan Slim, and welcome to another episode of Monday Market Outlook. The White House advanced President Trump's trade overhaul plan Thursday evening by unveiling a broad set of new tariff rates ranging from 10 to 40%, formally authorized through an executive order and targeting nearly all global trading partners. However, in a last-minute change, most of these tariffs, with the exception of Canada's, will now take effect in 7 days rather than the originally planned midnight Friday deadline. Despite the rollout of Trump's tariffs, the U.S. economy delivered a surprisingly strong 3% GDP growth in the second quarter, outpacing expectations and reversing the prior quarter's contraction. Consumer spending and a sharp drop in imports were key drivers, with the latter falling over 30%, reversing a surge from the previous quarter. Now, in GDP accounting, this import collapse is reflected as a positive contribution since lower imports reduce the subtraction from overall output. Meanwhile, exports declined and investment weakened, slightly dragging growth. Strong GDP figures led the Fed to keep interest rates unchanged for the fifth consecutive meeting this year, though two governors dissented, favoring a 25 basis point rate cut. This is the first time two governors dissented on a monetary policy decision in the last 30 years. The Fed typically strives for consensus, and dual dissents are nearly unheard of. So this one signals heightened internal disagreement between the Fed's policy path. Now, Michelle Bowman and Christopher Waller cited slowing economic momentum, flat consumer spending, and risks to the labor market favoring immediate rate relief. But despite the opposing views, Fed Chair Jerome Powell struck a cautious tone, noting that the new tariffs could pose renewed inflation risk. He emphasized the need for greater confidence that inflation is sustainably moving towards the 2% target before considering cuts. Powell also added that the unemployment rate remains low and the labor market is at or near maximum employment. As markets priced in Powell's statement last Thursday early morning here in Manila, the odds of a rate cut deteriorated rapidly to 39.2%. Now, a week ago, this was 61.9%, and the odds of a pause conversely jumped from 35 to 60.8%. As a result, the 10-year yields reversed to the upside, pushing the dollar for a potential 7th straight day of gains, in turn causing the peso to break support, with the dollar breaking past the 57 level. And of course, exacerbating the peso weakness is the anticipation of two more rate cuts by the BSP in their next policy meetings amidst slower inflation and a slowdown in GDP growth. Now, the ADB has revised its 2025 growth forecast for the Philippines downwards from 6% to just 5.6%, in line with its overall downgrade for developing Asian economies. So, the ADB also lowered the 2026 forecast to 5.8%, citing external challenges and global uncertainty. Now, in its July Asian Development Outlook, the ADB noted that the country's GDP growth was below expectations at 5.4%, and despite low unemployment, business confidence declined due to global policy uncertainties. So the August 28 meeting could see a rate cut by the BSP, further reducing the rate differential between the US and the Philippines to just 50 basis points, further contributing to the peso weakness. And of course, this spilled over to the PSEI as the index ended the week down 1.66% with a brief dip into 6,225, mainly because of the dollar strength. But at least Friday marked the start of August in the green to break a 6-day losing streak. Now, July and August has historically been the best months to buy the dip, and the markets may be giving investors another opportunity in the coming weeks to shop for some bargains. So the index could be hitting resistance here and could continue to pull back into 6,200, especially after last Friday evening showed the US labor market added far fewer jobs than expected, with a significant downward adjustment on the May and June numbers by a whopping 258,000 jobs, while unemployment ticked up to 4.2. This made the case for the Fed dissenters that the rate cut may be too late. As a result, the rate cut probabilities for September changing, with DigiPlus volatility-like levels now up 80.3% in favor of a cut. Just look at the swing before and after the jobs data came out. Note that Jerome Powell highlighted that the jobs numbers is a crucial data point in the decision for a rate pause. So leading up to the September FOMC meeting, it looks like a sure cut. No? Let's look at the S&P 500 charts. The index plunged 3.4% from an all-time high. First, from Trump's tariff blitz, followed by the bleak labor data that may mean that the Fed may actually be too late in cutting rates. But the major movement was on the 2-year yields and the US 10-year yields plunging 4.75% immediately after the announcement. As a result, of course, the dollar index also plunging 1.6% after a 6-day rally, helping at least the peso strengthen back to 57.70, coming down from the 58 levels. So we are coming into the week with all of this turbulence. GDP numbers were revised to the downside. Most company earnings so far are just in line, and even disappointing numbers from the major banks. So with risk off in the markets, worst case scenario, again, we continue the downward trend to 6,200, or maybe the peso strength can help the PSEI rally towards the resistance here and then to 6.2, because remember, we are entering into some chop, especially going into the ghost month. So the ghost month will start on August 23 and last until September 21. So for now, this could be a good chance for your August bargain hunting. So let's quickly look at our trends with benefits list. REITs continue to be the strongest sector so far. I'm not going to focus on the pullbacks here, but I'd like to focus on some stocks that I'm looking for this week that shows some significant improvements in their technical setups, namely Ayala Corp, Meralco, STI, Monde, PLDT, and 7. So let's look at the charts for Ayala Corp. It has been moving along this wide price range, but has recently consolidated along this tight price range supported by the moving averages. So it is in the lower band of this tight range here. This could probably need one more cycle, and a breakout here could mean a measured target to around 660 to 670, but Ayala Corp looking much better right now. Next, we have Monde. Monde also moving along a tight price channel here. 750 seems to be holding. This looks like a bullish engulfing candle supported by the moving averages. Hopefully, it retests 815. A breakout here could mean a measured target of 930 to 960. Price target was actually downgraded to 10 pesos, but the corn business looking like it's improving. So we'll see what happens when they report earnings on August 6. Now next we have PLDT. So PLDT has gained 9% from its recent trough. Now, what's significant here is that there is a very long downtrend line here. It has consistently been hit, but this time around, look at the breakout from that trend, right? And what's more significant is that the resistance here was supported by the 100-day EMA. It broke out of that. It also broke out of this resistance here, retest, bounced. It is currently above the 200-day EMA on its way to 1,336. So this is the next resistance here. A breakout means the next resistance is at 1.4. So let's see what happens with PLDT. Now, we don't cover 7 that much, but same scenario here, a breakout of a long resistance trend line here, which also coincides with some major resistance points. We have here the horizontal resistance line, the 100-day EMA, up to the 200-day EMA, a bullish movement for 7. Unfortunately, the dividend X date was last Friday. Next, we have Meralco. So Meralco has been in a long consolidation here at 529 and 550. Now, it has happened to Meralco before. We have a rally, a long consolidation, rally, long consolidation, rally. So we are looking at another consolidation right now. The next area of resistance would be at 580, then a price target of 620. The dividend X date on August 26. So let's see what happens with Meralco. Still one of the strongest technical stocks in the market right now. Next, we have STI, right? STI has pulled back significantly from its high of 180. It has done that before. So what we are looking for here is the consolidation. So we've got that. Now, the next thing we are looking for here is the breakout from this consolidation here, which coincides with the moving averages. Strong breakout, retest of support, and then a rally here. Same, breakout, retest, rally. So we are looking for STI, hopefully, to do that again this time around. And lastly, of course, no report will be complete without DG Plus. So DG Plus, up, down, all around. Monday, before the sauna, bullish. After the sauna, bullish. And then the Senate circus started and it was again down all around. But if you look at the price action here, it is respecting the major volume levels here. We have the VWAP here, 37. We have the VWAP here at 20. We have the third VWAP here at 1370. It's being respected so far. So we've hit the second VWAP here, bumped its head on another major volume area here. So the movement here, look at the candles, same candle heights. So we can more or less predict when we can come in and when we can exit. This Monday, what will happen? Will the Senate start their hearing? Maybe not. Maybe it can consolidate like this before it makes its next move. Will it go up? Will it go down? If it goes up, we are looking at potential gap fills. Depends on how you define gap fills. It could be 33.10. It could be 35.70. So watch out for these levels for DG Plus. For this week, the Senate is planning on starting the hearings on online gambling. Of course, they'll have to gather all the resource people and let's see how the schedules play out. So in the meantime, the media circus and the high blood pressure trading continues if you are trading DG Plus. So remember, make sure you have your BP apparatus on hand. For me, I made it more convenient. I have a Huawei Watch D. This Huawei Watch D has a blood pressure monitor. Well, this is not a sponsored post, but it can be. On a more serious note, the president has already expressed that he is not in a rush to pursue this issue. Again, consistent with his non-mention of online gambling in the SONA. Now, for me, think about it. He has 3 years left in his term. What legacy is he after? It does not sound like he's keen on being remembered as the president who banned online gambling. His SONA covered a wide range of national issues: economic resilience and job creation, agriculture and food security, health and education reforms, energy, water, and infrastructure expansion, as well as anti-corruption measures, especially in flood control projects, most of which needs a considerable amount of funds to implement. I don't see lawmakers proposing how to offset the loss in revenues by banning online gambling. I think a discussion on banning online gambling also needs to have a discussion on how to make up for the lost revenue from that sector. And that is not being addressed. So coming into this week, it will be one of the busiest weeks in terms of economic data. Tuesday, inflation rate. Wednesday, unemployment rate. Thursday, GDP growth. Not to mention the possible announcement, finally, of the index rebalancing, possibly again on Friday. You know, the PSE isn't really that transparent as to when they will announce, but historically, they've usually announced on Fridays after markets, usually late July or early August. So, I mean, this is like a hit teleserye series. The finale just keeps on moving and keeps us in suspense just so that they can earn more advertising money. But, you know, the implications of this delay actually increases the chances that the PSE might surprise us and incorporate their proposed changes that they solicited feedback on early in the year. The reduction in the public float requirements and the stricter test on trading volume and market capitalization. So we'll see what happens there, right? So it's goodbye July. Hello August. Good luck to us all in the Ghost Month. That's it for this week. Please like this video. If you found the information useful, please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly, and I'll see you again next week.